Good morning, students. Welcome back. So today we are going to start with this new set of auditing standards. Okay, so the topic for today will largely be about the quality control, wherein we'll be focusing upon these two, you can say, standards which are in respect of quality control, particularly SQC1 and SA220. Okay, both the topics are very important. In fact, if we look at SQC1, this is not really specific to any particular engagement. So generally, when we talk about an auditing standard, okay, so what do? We are looking at an engagement. Okay, so that is about the assurance engagement. Generally, that is what we look at. But when it comes to SQC1, it's about the professional firm. We can largely say that when it comes to the policies and procedures which a professional firm should put in place, that is something which is prescribed by this particular standard on quality control. Now, in relation to the engagements which that particular firm will be involved into, so that firm will be expected to ensure that they are adhering to all of these quality norms which they have set up. Okay, so it's all about, in a very simple manner, we can say SOPs which a professional firm is required to follow. And when it comes to SA220, so this of course is about the quality control, but it's not a sort of duplication. So you should not be thinking that do we have these two standards on quality control? No. So if you look at SQC1, see, its horizon is wide. It basically applies to the professional firm as a whole. Okay, so you can just say it is looking at the perspective of this organization as a whole. So that's how you are required to look into it. When we look at SA220, so this is specific to the engagement. So similar to any other auditing standard that the professional or a practitioner would apply to any engagement, so the same manner, this particular auditing standard should also be applied. Okay, so that's how these two standards are required to be looked into. Okay, now what I'll do is I'll just start with this SQC1 because it's a broad framework. So once we have this clarity, so a lot of points as around SA220 will automatically become clearer to us. Okay, yeah. So now let's talk about SQC1. SQC1 is the standard on quality control. Okay, now as we just discussed, every professional firm, right, that performs audits, reviews, or you can say any other assurance engagement. Now, that is where this quality control standard comes into the picture. Okay, why? Because this standard requires that the professional firm should establish a system of quality control. Okay, now what will become the basis for that system? It should be designed to provide the firm with reasonable assurance that the firm as well as its personnel comply with the relevant professional standards and the regulatory and legal requirements, and that reports issued by that particular firm or its engagement partners are appropriate in relation to the engagements they are involved into. Okay, so it's all about the policies, systems which a firm needs to put in place. So every time when we talk about audit, what do? We talk about the company, we talk about the client, we talk about the policies and procedures which the company needs to put in place. Okay, so over here, please remember that the perspective is not that of the company. Okay, so there's no auditee that we are talking about. We are talking about the auditor, or you can say the firm of that particular auditor, right? Yeah, so from that perspective, we need to consider it. Now, this standard prescribes some elements. Okay, and all of those elements are then discussed in detail as to how all of those elements are required to be considered and applied by the firm. Yeah, but you can say that the standard is sort of covered in the form of various criterias, or it talks about some elements which need to be put in place. So now what are the elements of the system of the quality control which the firm needs to establish? One, it talks about leadership. Okay. Second, ethics. Third, acceptance and continuance procedures. Now this is in relation to the engagements that the firm will be involved in. Fourth, HR. See, it's again similar to any other company. So HR department which is there in a company. So what is its role? Right? We all understand that. So the same goes for this firm also. So the firm also needs to have a team, or you can say this HR sort of function in place. Then it talks about engagement performance, which is in relation to the engagements which the firm will be involved into, and then the monitoring. Okay, now let's talk about all of these elements one by one. Now, what do you mean by leadership? Okay, and what is the requirement in relation to the leadership? So you can say that when it comes to the culture which is required to be maintained by any organization. Okay. So now what will happen? Such a firm, such an entity will have some objectives which it wants to achieve. Yes or no? And for achieving those objectives over a period of time or during the course of its journey, entity will also put some policies and procedures. Correct? Now, till the time those policies and procedures or that particular system is not followed, you can say by the top management, okay, or you can say the senior people who are there in that particular organization, that may not really become the culture of that firm. Why? Because for something to become the culture, okay, for something wherein you expect that the people should imbibe that culture, it's very important that the top management or the senior people are also following that. They are also behaving in that particular manner. So it's all about things that flow from the top to the bottom, right? So that's how it works. Correct? So that's why when it comes to the quality, okay, or when it comes to the culture which the firm needs to put in place so that there is a level of quality in terms of its deliverables, in terms of its actions, okay, or in terms of, you can say, various activities that the firm will be involved into. That's possible only when the leadership is focused towards that, right? So that's why this responsibility has been placed upon the leadership within the firm around what? That they should set up the policies, they should set up the procedures so that it promotes an internal culture, okay, which is focused on achieving the desired level of quality, right? Now what will comprise of the leadership? So you can say CEO, managing partner. So they need to assume the ultimate responsibility for the system of quality within the firm, right? Right. So it's extremely important that that is something that they start following. So what do they need to do? The firm assigns its management responsibilities so that commercial considerations do not override the quality. So let's suppose, for example, there's a client which is happy to pay, you can say, a good fee for a particular audit. But there are some risks attached to that, number one. And there are some expectations of the client wherein the desired level of quality in terms of the parameters which are set up by the firm may not be achieved in such a case. Now, in that case, what should be the focus of the firm? Should that be around the commercial consideration or should that be around the quality? So the answer is quality. Yeah. So at times, this commercial consideration may have to be overlooked. Yeah. And that is possible only when the leadership is focused, and that is what the leadership wants. And that's how this culture is set up within the organization. Correct? So that's how you get into this. But for that to happen, for that to be implemented, what do you need? You need the focus from the leadership. Correct? Next, the firm's policies and procedures addressing performance evaluation in respect of various projects which the personnel will be involved into, compensation, compensation in terms of the salaries, etc., which are paid to the employees, and the promotion means the systems through which the employee will grow within the organization, right? Some sort of incentives which are set up as a basis of evaluation, or you can say which are given based on evaluation criteria which is set up by the organization, right? So they are designed to demonstrate around what? The focus of the firm on the quality. Third, the firm devotes sufficient resources for the development, documentation, and support of its quality control policies and procedures. Now, that is again very important, that it should be the focus of the firm to get into this. So, it is something which the firm should be looking at in terms of doing this. Okay. Now, we can take this small example, okay, to get some more clarity around this. ABC is a firm of chartered accountants. So what do they have? They have a policy to accept the clients, wherein the risk evaluation is conducted with respect to the company and the promoter. Now, what do you mean? See, every time the firm will accept an engagement, okay, let's suppose a new client approaches the firm, or maybe the firm reaches out to a new client. So, can we say that firm will discuss the scope of work, agree on the fee, and they will just start doing the work? No. See, before the work is accepted formally by the firm, so of course the discussions might be going on, but till the time, or you can say before it is formalized, the firm needs to get into the evaluation around what? Around the risks which are attached to that particular engagement, around the risks which are attached to that particular company, including the promoters of the company. Why? Because this can have a huge bearing in terms of the delivery, right? Okay. And once that evaluation is completed and the firm is of the view, yes, they want to accept this, only then they will go ahead with that, right? This is also called as acceptance procedure, which is required to be followed by the firms for every engagement. Okay, so they need to also demonstrate the evaluation. So you can say some sort of documentation is required to be maintained by the firm in respect of all of these acceptance, or even if you talk about the continuous procedures. But we'll talk about that particular area or that particular item in detail as we move forward. Now, XYZ Limited approached the firm. Okay, so you can say it's a company which has reached out to the firm in respect of a particular engagement. So the promoter of XYZ Limited is a close associate and family friend of Mr. A. Okay. Mr. A happens to be the managing partner of ABC and Associates. Correct. So now what has happened? If you look at this particular company XYZ, its promoter is close associate, okay, and a family friend of the managing partner of the firm. Now, how is this relevant? See, because of this relationship, okay, which is there between the promoter and the managing partner, what may happen? That the firm's policy in respect of the acceptance procedure may get diluted, right? Its evaluation may not be proper. So there's a risk. So we are not saying that it will always happen like this. So we are saying there's a risk. It may happen. Correct. Now, if you look at this company, XYZ Limited, it's been in the news in the previous year for certain inquiries from the regulatory authorities in relation to certain matters. Okay. Now, existing auditor of XYZ Limited has resigned. And this has created a casual vacancy. So now what has happened? The previous auditor has resigned. XYZ Limited is ready to offer more fees, in fact, significantly higher than the fee which it was paying to the auditor who has just retired. Okay. And XYZ has approached ABC and Associates for appointment as auditor. So now XYZ is looking towards ABC if ABC can audit the financial statements of XYZ. Mr. A has a strong recommendation to the firm to accept the audit. Now, in respect of this engagement, managing partner of ABC, now he has been pushing harder that we should pick up this audit. So now at one place, what did we discuss? That before accepting any engagement, there's a policy which ABC has set up. Yes or no? So now what does that policy require? That any engagement they will pick up, you can say there's a set of procedures they will follow. If the client engagement will fulfill that criteria, will pass through that policy, then of course the firm would move ahead with that particular engagement. Otherwise not. So you can say it's a kind of system which the firm has put in place. But this may be bypassed, right? So this system which has been put in place, this may not be followed properly at times. Why? Because if, let's suppose, the managing partner wants to get into this engagement, let's suppose. Okay. If the managing partner wants to get into this engagement, so what will happen? Even if the firm has followed this policy, okay, applied this procedure in terms of evaluation of whether they should work for XYZ or not, and let's suppose the evaluation comes out with a negative result, what will happen? That will be sort of bypassed. Why? Because the managing partner happens to be an authority within the firm, and the managing partner wants that we need to get into this engagement. Yes or no? Now, in this case, what is your understanding of the functioning of the tone at the top in respect to this firm ABC and Associates, which you think? What are the considerations one should exercise to uphold quality of the firm? Yeah. So it's an important point as regards the firm. Now, tone at the top. Now, what do you think about it? Do you think this tone at the top is being maintained? Or you believe no? That seems to be missing. Why? Because even if the firm is not following, or they are ready not to follow their procedures, their policies in respect of one client, so can we say it's being followed in an appropriate manner? Answer is no. Answer is no. See, something which they will have to follow will have to be followed for each and every client. Correct? Yeah. So now let's try to understand. Okay. Moving on to the next, ethical requirements. I'm sure you would have gone through the code of ethics. Okay, so there are some code of ethics which are prescribed for the professionals, chartered accountants. So now, because we understand that there's a set of ethics which are prescribed and which is a mandatory requirement for every firm to follow. So that is what the firm also needs to put in place. Okay. So they got to have a policy in respect of those code of ethics. Right. Now, when it comes to those code of ethics, so we are not going to duplicate. Okay. So all of those code of ethics as to what do they require, what is required to be followed. Okay. Swaminathan just mentioned that it's about the integrity, objectivity, professional competence. Okay. That due care, confidentiality, professional behavior. All of these aspects are required to be looked at. Very good. Now, when you say all of these aspects are required to be looked into, that's good. But as a firm, they need to ensure that it's been followed by the firm or not. And that is where one very important criteria comes into the picture, and that is about independence. See, the auditor has to be independent. That's what we have discussed. Yes or no? Yeah. So when it comes to any assurance engagement, what is important? Independence of the auditor. Why? Because that's how you will look into the things. That's how you will be able to get on to the reviews in an unbiased manner. Now, for this independence, the firms need to put a system in place. Around what? Around the evaluation of independence of its personnel. So how should that be done? One, the firm should have a policy, okay, which is talking about the independence requirements. And this policy should be communicated, should be accessible. Okay, so this should be accessible to all the personnel in the professional firm. Number two, identify and evaluate circumstances and relationships that create threats to independence and to take appropriate action to eliminate those threats or reduce them to acceptable level by applying safeguards. Okay. Now, see, when it comes to the firms, so what do they do? Annually, they are required to obtain a confirmation from its personnel. Okay. And what is that? That is in respect of independence. Right? So this confirmation, you can say generally is a prescribed format which the firm will put into place, which is required to be duly filled in terms of various requirements of independence, which will be covered by that particular form or that particular document. And then it is required to be signed and provided by the personnel to the firm. Okay. So thereby what will happen? Firm would have ensured that its employees are independent and they are following the policies, procedures of the firm. Okay. So this has to be obtained at least on an annual basis. Okay. Now, why is that required? Where does it help? As we discussed, that there are some situations wherein the independence of the auditor may be considered to be sort of impaired. The auditor or the professional is expected to be working in an independent manner, okay, in an unbiased manner. And if independence is not maintained, or you can say there could be certain scenarios, there could be certain situations which may pose some type of threats around the impairment of the independence. Okay. Now, one of them happens to be the familiarity threat. Now, what do you mean by familiarity threat? See, the familiarity threat, as the terminology also suggests, talks about a threat in relation to a particular engagement. Okay, so now what is the threat? That the personnel, or you can say the audit team, they are quite familiar to the client. Now, what do you mean by that familiarity? So let's suppose if you audit a company, say for 1 year, what will happen? As an auditor, you go meet the people which are there in the organization, and some of the persons in the organization who are responsible for financial reporting particularly. As an auditor, what do? You will have regular interactions with them. Yes or no? Yeah. So your interactions will be quite regular. Okay. And some of these engagements may be running into a long period of time. Okay. If you look at the large companies, then the audit team may be doing the audit throughout the year. Considering the size, considering the complexity, considering the scoping, and considering the various reporting requirements. So in such a case, what will happen? Over a period of time, you tend to develop some relationship with that particular person who is there at the client place. Yes or no? Yeah. So it happens. Correct. Which can be a risk, because if, let's suppose, this length of service of the senior personnel on the engagement, let's suppose, is say 3 years. Let's suppose it's say 7 years. So he knows everything about the organization, he knows about the people, and the people in the organization also know about that particular auditor. And they are quite familiar to each other. Okay. They start sharing some sort of comfort level with each other. Okay. And that is where the bias may creep in when it comes to audit, which shouldn't happen. Okay. Right. Now, how do you prevent that situation? So now we are talking about the policies which the firm needs to put in place to ensure that some of these situations do not arise. Correct? So in such a case, what do you do? How does it really help the firm? Right? So in such a situation, one of the example for that safeguard will include rotating those personnel who have been there at the client place, who have been involved in that particular project or that particular engagement for a long period of time. Yes or no? So when it comes to the listed entities, for these audits, engagement partners should be rotated after a predefined period, normally not more than 7 years. Okay. Except in cases where the audit of that listed company is conducted by a sole proprietor. Means the practitioner is there, auditor is there, but that's sole proprietorship firm that way. Okay. So you do not have any person other than that. But this sort of situation will not arise. Why? Because now you have this rotation requirement anyways, which is mandated by the Companies Act, right? Next is about acceptance and continuance of client relationships, or you can say any engagement. See, we have already talked about acceptance of an engagement. Excuse me. Now, for the acceptance, what will happen? There will be a set of parameters which the firm will have to evaluate. See, acceptance is something which applies to a new client, and continuance is something which will apply to an existing client. Right? Now, let's try to understand that if, let's suppose, an engagement is required to be accepted or say continued. So what is it that you'll want to do, right? So just a minute, let me just open one document. So say there's a firm ABC, right? Now, for the financial year 25-26, a new client has approached, or you can say a new client is what the firm is targeting. New client means it's new for the firm. Currently, they are not doing that activity or that project for that particular client. So in this case, what will the firm do? Firm will have to evaluate whether to accept this engagement or not, because this is not yet accepted. Now for acceptance, what you will do, we'll talk about that as well. Then there could be another situation. Let's suppose there's an old client or existing client. Old means existing only. See, when the client is existing, so do you assess or that whether you want to accept it or not? No. Why? Because the acceptance is already done. So in this case, what will happen? Say the audit of FY 24-25 is completed. Okay. So this audit is already completed. Now, for the next year, for the financial year 25-26, let's suppose client wants to continue with the same professional firm. Okay. Now, in this case, what do we need? As a firm, we now need to assess whether we would want to continue with this or not. Yes or no? See, in this case, to say that the firm will assess whether to accept it or not will be wrong. Why? Because it's an existing client. So it's not about acceptance. It's about whether the firm wants to continue with that client or not. Okay, now comes the point that whether it's about acceptance or the continuance, what is it that the firm needs to do? Evaluation is required. About what? About the project. So if let's suppose that's the audit, what have been the issues in the past, whether those have been dealt in an appropriate manner or not. Okay. Background of the company. Okay. Any matters, any issues which are important to be considered. Background of the promoters of the company. Okay. Now you may be thinking that all of these things, how will that be relevant in respect of this continuance requirement? See, therein again, it will be relevant. Why? Because it may have happened that since the time that was accepted and this was evaluated, some of the things have changed. Okay, so you have some learnings in respect of that particular client or the engagement, which you now need to reconsider. Yes or no? Correct? Now, all of these aspects which the firm will have to follow will have to be documented in an appropriate manner. See, if you look at the things practically, what will happen? Maybe the firm may say, or its personnel may say, no, we know the client, we know the engagement. We have been doing this engagement, let's suppose, for the past 3 years. Okay, so that's why we know the attached risks. And that sort of evaluation to a certain extent is already completed when we completed the audit, or you can say during the course of the audit which has just got concluded. Now, do you think it will be appropriate? Answer is no. Answer is no. Why? Because any of the updates, any of the changes, they are required to be considered. Okay, for the purposes of this evaluation. So it's not necessary, as we discussed, that this evaluation will always result into some of the you can say non-compliances, or you can say It may not meet the criteria. No. Okay, so that is not the case. Every time to say that the same thing will happen may not be true. Clear on this? Yeah. So I understand, Saminathan, you're around. Any questions, any doubts so far? Saminathan, any questions, any doubts so far? Okay, or anything that you like to add to this on the basis of whatever you would have prepared? Anything that you'll want to discuss? You'd like to add something to this? Any thoughts from your side? No? Sure. All right. Okay. So now we just go back to the document. Just right. So now, when it comes to acceptance, this will help the firm about what? Integrity of the client, promoters, KMP, competence to perform the engagement, compliance with the ethical requirements which need to be put into place. Okay. Now, with regard to the integrity of a client, matters that the firm considers may include identity and business reputation of the client's principal owners. A very important check. KMPs means the directors of the company. Related parties at times and those charged with governance, which is about the audit committee, board of directors, right? Nature of the client's operations, including its business practices. Okay. Information concerning attitude of clients, principal owners, key management towards such matters as aggressive interpretation. So if let's suppose they have been following some policies, okay, or maybe the entity which is under consideration, they have taken some accounting positions which are quite aggressive in terms of their evaluation. Okay, and why is that done? To make it favorable to the company. Okay, which may not be in line with what the accounting standard, or you can say some of these accounting principles may require. Similarly, if you look at some concerns around the control environment, another very important point, whether the client is aggressively concerned with maintaining the firm's fee as low as possible. Okay, why? Because again, this can impact the quality, right? Indications that the client may be involved in some sort of unlawful activities. Okay, that could be of any nature. Indications of an inappropriate limitation in the score. Now, this is very commonly found that the client may want the limit to be attached to the procedures, or they may limited the work, right? They may put down some sort of limit. Now, when it comes to some of the projects, for example, statutory audit, so that's quite standardized. So there's no scoping that we need to discuss in that case because that is driven by the statutory requirements, right? So all of these things become important. Now, in considering whether the firm has the capabilities, competence, time, and resources to undertake an arrangement, what are the matters the firm need to consider? First, firm personnel have knowledge of relevant industries or subject matters. Very important. Do they have the skill set which is required to execute the job? Do they have the experience? Correct? Or do they have the relevant experience? Let's suppose, say, a telecom company is being evaluated in terms of its acceptance procedures. But when it comes to the firm, they do not have any experience in the telecom sector in the past years. Okay. And it's not only about the past experience. Even if you look at the current requirements, firm doesn't have a system to gain some understanding about this particular sector. So if let's suppose firm doesn't have the skill set, firm doesn't have the appropriate resources, so will they be able to achieve the desired level of quality? Answer may be no. Correct. Next, experts are available if needed. So again, very important thing. Individuals meeting the criteria and eligibility requirements to perform EQCR are available. Okay. Yeah. And the firm would be able to complete the engagement within the reporting deadline. Again, very important aspect. Correct? Yeah. Now, policies and procedures on withdrawal from an engagement or from both the engagement and the client relationship address issues that include the following. Discussing with the appropriate level of client's management and those charged with governance regarding the appropriate action that the firm might take based on the relevant facts and circumstances. If the firm determines that it is appropriate to withdraw, discussing with appropriate level of client's management. Okay. Considering whether there is a professional, regulatory, or legal requirement for the firm to remain, okay, or for the firm to report the withdrawal. Yeah. So all of these things they need to put down in the form of a document. So that's how they will have their policy, which is in alignment with what the SQC requires. Correct? Next, human resources, HR. See, HR is something which is known to all. What is this HR function? So what do they do? Yeah. So generally, what do you understand about HR? You'll think that HR is all about recruitment. Yes or no? But can we say that this HR function is limited to the recruitment? Answer is no. Answer is no. See, when it comes to the HR you can say is a function which is meant for people. Okay. And when it comes to a professional firm, people form the core of the firm. See, when it comes to a service industry, or if let's suppose if you talk about a service provider, how do they work? Do they have any products to be sold? Answer is no. Okay, products, by products, I mean to say that is it about delivery of goods? No. It's about rendering services to the client. Okay. And for rendering services, what do you need? People. See, without the people, you will not be able to survive. Yeah, because it's the service which has to be driven through the people, right? So that is where this responsibility arises, and that gets attached significantly on the HR function, that they need to put the policies and procedures, okay, as around recruitment, compensation, training, career development, performance evaluation, and some of these aspects. See, the idea is not about recruiting a person and paying him the salary. No. Idea is to ensuring that the person stay in the organization and you have a right person for the right job. And that person is also appropriately trained. Okay. In terms of what? In terms of the services which that professional is required to be rendering, correct? And over a period of time as to how that person will grow within the organization, within the entity. Okay, so that's what you call as career development or the performance evaluation, right? So now the firm should assign responsibility for each engagement to an engagement partner. Now, what should these policies or procedures include? One, identity and role of engagement partner. Again, very important. Engagement partner should have the competence, capabilities, authority, and time. Now, this is again very important. He should also be having appropriate, adequate time, which he is able to devote to those engagements. Okay. Now, let's talk about engagement performance. Now, when it comes to the engagement performance, see, what is an engagement? Engagement is nothing but you can say a project, right? And for this engagement, what is our overall objective? That the quality is ensured in terms of the delivery, correct? Now, for this quality to be ensured, what do you need? You will need to put into place some of those requirements that we have just talked about. Okay. Some sort of incentive, training, skill set, enhancement of skill set wherever required. Yes or no? Yeah. Now that again is the responsibility of the firm, that they need to have a mechanism through which this objective is met. And that's where sometimes what may happen is some of the areas or some of the complex situations may arise, wherein the firm may need assistance from, let's suppose, an expert who is outside the organization. That's one. Or maybe the firm is having say 5 partners. But what do they need? They are stuck in respect of, let's suppose, a particular matter, okay, over which they need to work upon. So let's understand. See, two situations are possible. Okay. So let's understand these situations. AC and company. So there's a tricky matter over which they need an expert. You can say guidance or support of that. Yeah, so that's one way to look at it. And when we talk about expert, so this is external party. Correct? No. Another situation may arise. PQR and company, which has got 3 partners. PQR. Okay, no. There's a project, there's an engagement which is going on over which P is the engagement part. Engagement partner means he will be the signing partner for that particular engagement. And now, during the course of the engagement, there's something tricky which has come up. Okay. So therein, what will happen? Within the firm, let's suppose there's a person who is suitable for those sort of areas. So what P can do is P can reach out to R for the consultation. Okay. So now these consultations are again a part of the systems, policies that need to be put into place. Clear? Clear on this so far? Yeah? All right. So now, moving further. Engagement quality control review. Anyone having any idea about this engagement quality control review? What is EQCR? I can see Manish, Saminathan. Any thoughts on this? What is EQCR? Yes, if you can just speak up and explain. Yes, Saminathan, if you can just speak up and explain. Manish, if you can just speak up and explain. What is this EQCR? What is the requirement of EQCR? If you can just elaborate on these points quickly. Anyone? Saminathan, Manish. Yeah. So you need to raise hand. Okay. So that is when the IT will unmute you. Okay. So and yes, Saminathan.
Hello, sir. The firm will appoint EQCR, and once the audit engagement is completed,
Yes.
after review by the engagement partner, the
Yes.
EQCR will review. Then, after his review only, the audit report will be finalized.
Right.
If any conflict matter, any point there is identified by that EQCR, it
Right.
has to be consulted and discussed, and it has to be resolved as well. If there is any query also, they will involve the other people also to then they can take the legal advice, or he can take the professional advice as well to conclude that query. Then after the conclusion of query, they will document how the query was resolved as well. Then only that particular engagement, the audit report will be released.
Okay. How important is this EQCR in the given situation? Can you please explain? So how important is this person? Yeah. So Saminathan, Manish, how important you think this person is EQCR?
Yes, sir. The EQCR is a independent person. He will not involved in that particular engagement. He is a separate
Right,
person, and
right,
also he will have that competency and authority. He has sufficient experience and expert knowledge over the process,
right.
so that he is an independent reviewer of that particular
Right.
engagement. So
Hmm.
it is very important to have such a review.
Hmm. All right. So let's look at this requirement criteria of EQCR. Okay. So let me just take an example. So let's suppose there's an audit of ABC Limited, right? Now, who is the auditor? Say PQR and Company is the auditor. That firm is the auditor. And what they have done is they have designated P as the engagement partner. So P is what? Engagement partner. Okay. Now, for certain engagements, for example, the listed companies, it is important that there is somebody to be looked into in terms of maintenance, or you can say in terms of ensuring the quality control. Okay. For that person, let's suppose what the firm has done is they have designated Mr. Q as what? EQCR. What is the full form of EQCR? External quality control reviewer. So what is going to be the role of this Q? You can say Q is an independent person who is going to look at the way this entire audit engagement will be executed by P and the team of P. Okay, so you can say it's like a second check which the firm will want to put in place. Okay, and you may be thinking that does it mean that it will be a sort of duplication for the company ABC Limited because two persons are going to review their work? Answer is no. See, the role of Q will be what? Role of Q will be to ensure quality control or to ensure that the quality control is put into place. So that's why Q will not be looking into each and everything the way P will be looking at. No, that's not what Q will be doing. That's the role of P, engagement partner, right? That's the role of engagement partner. Now, what is it that Q will be looking at? Q will be focusing on the key areas or some of the important areas. Yeah, to that extent, you can say it will be like a kind of check which Q will be following over the work of P and the team of P, or you can say this entire engagement. Yeah. Okay. So that's what you can broadly say is the role of the EQCR. Now, in this case, this EQCR will also be considered as the part of engagement team only, because to a certain extent, he is also playing the role in this particular engagement team or in this particular engagement as far as the client is concerned. Yeah, it's just that what the firm has done is firm has assigned him some responsibility, or you can say each and every engagement team member has got some responsibility. Correct? Clear on this? Now, EQCR is an important area. Why? Because that's how the firm will want to ensure that some of these quality control procedures, some of these systems are put into place. I'm not sure as to why this keeps coming up. Just a minute, and let me just go back to the document. Okay, yeah. All right, so now let's move further. Monitoring. Let's quickly talk about monitoring also. Now, what is monitoring and what is required to be done in case of monitoring? See, once the work is completed, once the engagement is performed, so what will happen? Firm will archive the files. So there will be a system process for archival of files. Archival is all about placement of the documents related to the engagement which has been performed. Okay. Now, as around that archival, or once the archival is done, it is important that the firm needs to set up a mechanism so that they can review some of those engagement files. Now, in this case, what is the objective? So you can say it's like an audit of the auditor. Okay. So let's suppose in the given example, which we just discussed, ABC Limited has been audited by PQR. Okay. And P was the engagement partner. And let's suppose PQR and company wants to ensure that every partner is following the required, you can say, policies, procedures in relation to ensuring the quality parameters. So what the firm can do is, firm can now review the entire documentation of P, Q, R. Why? Because all of them are the engagement partners at one or other place. So how will the firm do this? Firm will get that reviewed through some other partner. Okay. So thereby, what will happen? So thereby, the firm will try to ensure that during the engagements which have been performed and which have been closed, which have been documented, which have been archived. Okay. So the quality control parameters were in line with what the firm aspires to follow. Right? Clear on this? Yeah. So I would say this is all about this SQC1. Now, to continue on this SQC1, what we will do is we'll just look at some questions. Okay, just give me a minute. Right. So let's look at these questions one by one. Right. So let's look at these questions. ABC and Associate Chartered Accountants has a policy to accept clients wherein the risk. Okay, so I think this one we have already covered, right? So this one we have already covered. So I'll just skip this one. So let's move on to the next one. CAM is introduced to a prospective client in a social function. Yeah, so it appears to be a new client. Correct. So that's why we are calling it as prospective client. He assures to visit office of CAM very soon in relation to professional work. During the discussions over a cup of coffee next week, it transpires that there was a search by the relevant authority in the premises of this client about a month back, resulting in recovery of huge sum of cash. Okay. Now, the department had also searched his, so you can say there is another department which has also searched his premises in relation to bogus capital gains on penny stocks. So you can say the client seems to be involved in some sort of unlawful activities. Yeah. So that's why some of these search raids were conducted. Complaining about the poor quality of services provided by his present auditor. Now, client is saying that its present auditor, okay, is not providing the desired level of quality in terms of the services. So that's why this client offers appointment as the tax auditor of his 5 family owned firms to CAM and is happy to offer a good fee. Okay. So it's an insurance engagement. Tax auditor of his 5 family owned firms. So there are 5 firms for which the appointment is under discussion. Now, in this case, what are the factors to be evaluated by CAM if he wants to take up the engagement? So that's what we need to look into. Correct. So let's look at this. So what are the factors he will consider? As per SQC 1, now it's a new client. So before accepting a new engagement, what do we need? Integrity of the client should be considered, including the matters that indicate unlawful activities. Right? Now, in the given case, considering that 2 departments are in the process of, you can say, some sort of investigation or in terms of their review which they are performing in respect of this client. So again, it's not established as yet, but it appears to be the case wherein the client is involved in unlawful activities. So will it be appropriate on the part of CAM to take up this engagement? Knowingly some of these things the client is involved into? Answer is no. So that's why what should CAM do? Offer should not be accepted. Yeah. Now in this case, what can be the concern? Client is happy to pay a good fee. And that's where we discussed that this quality control parameter needs to be looked at. That's when this quality control policies, procedures of the firm come into the picture. Okay, so that any sort of such bias doesn't creep in. So CAM should not be thinking, oh, the fee is good, so what if there is a risk? Okay, that is not appropriate. Yeah, so that is not appropriate. So some of these factors are important. So should this be considered? No. So this should not be the only thought. So the point is that should the professional firm, should the professional not be looking around the fee, not be looking around a good fee? So of course they will be looking around that. Okay, but it should not be the sole criteria, or it should not be a significant criteria, so that some of the other important considerations are ignored. Okay, so that will be inappropriate. Yeah, so that's what should not be done. Clear on this? Now looking at the next one. RST and Company, that's a firm of chartered accountants. So they are the auditors of a listed company. Okay. So it's about existing auditors. So the company is engaged in manufacturing of heavy machinery components. Right? So that's what the company is involved in. So that's the nature of the business of the company. Audit report for the year 23-24 also included reports on matters listed in CARO 2020. While reporting under clause 7A of the said order relating to regularity of undisputed statutory dues by the company, auditors have commented that company is generally regular in depositing statutory dues to the appropriate authorities. So this is what the auditor have commented upon. Is the qualitative number one, and can we say that this one is also in line with the requirements of SA 220? Okay, so let's think about it. Such type of reporting is not qualitative. It is not in accordance with SA 220. One of the objectives of the auditor as per SA 220 is to implement quality control procedures at an engagement level. Now we are not looking at the firm level when it comes to SA 220. Okay. Reporting under CARO 2020 is not proper, hence the audit does not comply with relevant regulatory and legal requirements. Correct. Next, let's look at the next one. PQR and Associates are the statutory auditors of a listed company. Okay. They are the statutory auditors. And once again, we have a listed company under consideration. There arose an issue during the course of audit relating to related party transactions. Right? Engagement partner wants to consult EQCR on this matter. During the course of audit process itself. Now the question is, can he consult with EQCR? Right? So that's what we need to understand. That's what we need to discuss. Any thoughts? Anyone?
Yes, sir. That
Yes.
engagement partner, the statutory auditor, can consult with that EQCR during the course of the audit as well. When there is a significant matter or issues is involved,
Right.
as you discussed earlier as well, he is also part of the engagement team. Whenever there
Right.
is a doubt, definitely for all, not for all the matters, whenever there is a like this situation, he can very well consult with you.
Okay. So what will become the basis of that consultation means, do we have any such requirement or do we have any such allowance under any of the auditing standard means, what will become the reference point? So what becomes the basis for you to say yes, it can be done or it cannot be done?
This is as per a SQC1 only. Say related party transaction is talks about SA 550,
Right.
but that SQC1 itself is given power to the engagement partner to consult with EQCR whenever there is a significant matter or difficulties. He can consult with you.
Okay. All right. So let's look at this. It is necessary to maintain the objectivity of the reviewer. So therefore, participation in engagement or making decisions for the engagement team is to be avoided at all costs. Otherwise, what will happen? This objectivity will be impacted. However, engagement partner may consult EQCR during the engagement so as to not compromise his objectivity and eligibility to perform the role. Okay, so now see, I think we can just maybe spend some more time on this EQCR process. Okay, so let me just take you back. Now, how does this EQR process really works? Now, please remember that this EQCR process, or you can say this EQCR, is a very important requirement in relation to any audit engagement. Okay, so of course, wherever the EQCR applies, so a firm may not have the EQCR for each and every engagement. Okay, so this is something which will apply to the listed companies. Okay, and of course, if let's suppose there's some sort of high risk on the engagement, so that's where the firm may also consider to bring in the EQCR. Now, when it comes to the audit, so you can say largely there are two parties. What are those two parties? One is the client. So this is the client that we have. or you can say auditee, correct? Or you call it as a company. So we call it by different names. So that is one. Then you have another party which you call as auditor or engagement team. Now, as far as the audit is concerned, okay, this EQCR is nothing but a part of engagement team only. Yes or no? Yes or no? Now, in this case, because the EQCR is a part of engagement team, so that's why what should he do? If you look at the 4 stages of audit: planning, execution, then of course conclusion and reporting. Like any other engagement team member, EQCR should also be involved in all of these stages. Once again, you might be thinking that, is it not a duplication? No. See, when the engagement team will plan, they will have their audit strategy. They will have their audit planning. So that sort of discussion should involve the EQCR. So he gets the clarity about the company, about the audit plan, okay, about the overall audit approach. Only then he will be able to look into the things. And if there is any corrective action, or if there are any suggestions, improvements which the EQCR wants to suggest, he can do that at this stage itself. Yes or no? So that can be done at this stage itself. Now, during the course of the engagement, if there are any challenges, if there is anything that the engagement team wants to focus on, there are some critical areas, there are some significant issues over which engagement team means the audit partner, audit director, audit manager, executives on the ground are taking some positions. Okay. So there again, it becomes important to keep updating the EQCR about any significant developments. Okay, which are on the over and above the audit plan. Because see, in case of an audit plan, you will not have each and everything which is listed down. During the course of audit, a lot of things which will come up. So your plan is more of an approach. But when you go look at the activities, look at the documents, look at the issues, they may be new, which are required to be closed at that point of time. So it's important that EQCR is also updated on all of those points. Why? So that any sort of suggestions can be provided at that very time, and that can also avoid a situation wherein there is a conflict. Why? Because there can always be a different view which the EQCR may have as compared to what the engagement partner may have taken. Yes or no? See, to get on to the EQCR at this stage, when the audit is wound up, they are about to sign off, may not be helpful. Why? Because EQCR has not been able to add any value to this. So at this stage, everything is closed. So he doesn't really help the system. He doesn't really help the process. So for this entire process to be looked at, to ensure that this entire process works in a mechanism the way it is required to be achieved, in line with the policies, procedures of the firm, what do they need? They need this involvement at all the stages. Yes or no? However, at the same time, one needs to also appreciate. See, it's a thin line. Huh? One also needs to appreciate that EQCR doesn't happen to be the audit partner. So that's why idea is not to duplicate the work. Idea is not to duplicate the work. But yes, of course, idea is to avoid any sort of issues, any type of situations or any differences of opinion to be or which may arise in relation to this particular engagement, and that can very well be achieved if the EQCR is involved at all stages of the audit engagement. Okay, in a limited manner, of course, or you can say in a manner which is limited to the scope or the role of the EQCR. But at least that part should not be passed on towards the end of the engagement. Okay, why? Because then, of course, this entire objective may not be achieved. Yes or no? So in that case, what will happen? In that case, if let's suppose the entire engagement is completed, work is all done, field work is all completed, most of the issues have been discussed and agreed upon. Many a times, what do you do as an auditor? You agree on certain matters with the client in terms of the accounting positions, in terms of the audit approach, okay, in terms of the sampling, for example, in terms of the way the audit is required to be done, in terms of the procedures which are required to be followed. If let's suppose once this entire thing gets completed, and then let's suppose EQCR has some observations, has some queries, has some suggestions, the implementation of which may take some more time, then what will happen? Then you go back to the client. Yeah. Okay. Which can always be done. There's no doubt you can do that, but that can have an impact on the timeline. And that is also not good on the part of the professional firm. Why? Because as far as the client is concerned, client knows PQR and company. Yes or no? Whether PQR and company has P as the audit partner, Q as the EQCR, does it really matter? No. They understand PQR is their auditor. So that's how the things are required to be looked at. Clear? So we can just further discuss on this. But I think what we can do is, I think this is a bit stretched. So we can take a break, and after the break, we will continue with our discussion. Manish, we can take a break now, and let's meet after 15 minutes. Huh? All right. All right. So let's pick up one more question. Okay. So after this, what we'll do is we'll just also touch upon some of the requirements of SA 220, and then we'll come back to the questions, right? Okay. So now, so let's look at this one. PNE and company, they are in the midst of audit process of a listed company. So once again, you can see the audit is going on for a listed company. Now, during the course of audit, an issue arose relating to revenues from contracts with customers in terms of Ind AS 115. Okay, so there's a matter related to revenue recognition which seems to have come up. Now, what has happened? Engagement partner took a certain stand. Okay. However, EQCR recommended otherwise after review. Now, this is something that we discussed just before the break. That at times, some of these types of situations may arise. Now, engagement partner and EQCR, they have a different point of view. Yeah, which is possible at times. And see, these difference of opinions could be for various reasons, maybe depending on the experience, okay, maybe depending on the interpretation of the particular matter, or maybe depending upon the lack of knowledge. Maybe one of them has the knowledge, other one doesn't have the required knowledge in relation to that particular matter. Okay, so the way they are looking at the things are completely different. Okay, but what if this situation arises because both of them have the authority? Okay, now in this case, engagement partner is not willing to accept recommendations of review. So there is clearly a conflict. Yes or no? See, generally, when it comes to a professional firm, what they should have is a mechanism to resolve conflicts which arise within the firm. So the conflict means they are not fighting with each other. So it's all debates or disconnects which might be there in relation to some of these matters. So that's what you will talk about a conflict in the context of a firm. Right? So now, how do you deal with that? What do you do to resolve that? So that's the thing we are required to look into. Okay. Now in this situation, once you have come across such type of problem, okay, some sort of issue is there. So what do you do to resolve this? So you'll have to actually go to the system of the firm in this case. Now, what will be the system of the firm? That is what you need to find out. Okay. You need to evaluate the system. You need to go back to the system of the firm, which will help in the resolution of this type of conflict because the firm will have that mechanism. Okay. So now that mechanism will come into play. And that's how this resolution will be achieved. If let's suppose that system is not put in place, then what will happen? Now they will have to create a system. Because eventually some resolution will have to be found out. Because till the time it is not resolved, how do you deliver this to the client? Because it's important that both of them agree on a certain position. Yes or no? Yeah. So in case recommendations are not accepted and the matter is not resolved, The matter should be resolved by following established procedures of the firm, by consulting with another practitioner or firm or a professional or regulation body, means whatever mechanism they would have set up. Yeah. And only then the audit report should go out. Otherwise, that audit report will not be considered to be the one which is finalized. Yeah. Okay. All right. So now, still there are a lot of questions we need to look into. But what I think is maybe we can just look at some of the requirements of SA 220 as well. Okay, so then we'll just look at the questions of both SQC as well as SA 220. SA 220. Okay, SA 220, if you look at this, this is the auditing standard, which is in relation to a particular engagement. Now, what does it mean? See, this standard also talks about quality control. Okay. But over here, the quality control is not looked at from the firm's perspective. We are not talking about firm as a whole. We are talking about engagement of that firm. Understood? So that means the applicability of this standard will not be to the entire firm, but to the specific engagement. Okay, so that's the difference between these two. In fact, when it comes to the engagement of the firm, so can there be a conflict between SQC1 and SA 220? Answer is no. Actually, SA 220 should be in a manner an application of SQC1. Yes or no? It should be actually in a manner an application. Yeah. So that's how it should really be required to be looked at. Okay. Clear on this? Now, let's take an example for this. Now, how do you differentiate between SQC1 and say SA 220? So let's suppose there is a professional firm. Say you have PQR and company. Now what do? You will apply SQC1 on this. So if you apply SQC1, the firm will have some quality control parameters. Firm will have some policies and procedures. Now, what is the objective of those policies and procedures? Objective is what? That the engagements which the firm will pick up, the firm will try to ensure the quality is achieved in that. That is going to be the objective. Always, correct? Now, through this SQC1, you can say what is the endeavor of the firm to ensure quality is achieved at a desired level. Desired level will again be dependent on the firm as to what is it that they are trying to achieve. Now, let's suppose this PQR and company has got an audit. Say they have got one audit. And it's an audit of, let's suppose, a listed company. Say it's an audit of ABC Limited. Okay. Now, when you say there is an audit of ABC Limited to be performed by PQR and company, what do you call it as? That is what you call as an engagement. Okay, for the firm, audit of ABC Limited will be nothing but an engagement. Like any other engagement, any other project, this is also an engagement. Okay, so now on this engagement, can we say SQC1 will apply? Of course, yes. SQC1 will actually apply. Why? Because something which the firm will be following as a part of its policies and procedures. So that is one, what it is personnel, whether it's the partner, it's the manager or the executives of the firm will apply. Correct. On the top of it, we also have an auditing standard. And what is that? SA 220. Okay. Now this SA 220 also talks about the quality control. So you can say for the quality control, there's a specific auditing standard. But can we say that SA 220 will require something in relation to this quality? Okay, which is not in line with SQC1? Answer is no, that's not possible. Or can we say that SA 220 will require something which is in addition to SQC1? No. Okay, so the perspective is different. So the whole idea is that when you look at SQC1, you are talking about the firm as a whole. So that's the perspective you look at. Okay. But when you look at SA 220, you are talking about engagement. Understood? Yeah. So that's the difference that you will have when it comes to the application of these two standards. Okay. Now, when it comes to the quality control, so there again, all the parameters which the firm would have set up in terms of achieving the desired quality level will have to be applied, will have to be considered, which are specific to each and every engagement. Okay, so that's why what will happen every time there will be an engagement. Let's suppose this is audit of ABC Limited. Similarly, now let's suppose there is another audit. See, there is another audit, audit 2, audit 3, so on. For all of these engagements, for all of these audits, what will happen? This SA will keep applying to them, or you can say you'll have to consider the requirements of all of these your requirement of SA to all of these engagements specifically. Correct. Now let's go back and let's try to understand as to what do you want to achieve in this. One, when you talk about SQC1, in case of SQC1, we discussed about some of the elements wherein we talked about leadership, ethics, acceptance parameters, engagement performance. So all of these things will also be required to follow in this case. Now it's the leadership that is required to focus upon. So it's the leadership which needs to be looking into as to what is going to be the objective of the organization when an engagement is picked up and how the work will be performed so that the required objective is achieved. Okay. And what do you mean by required objective, or what do you mean by desired level of quality? Something which is in line with the professional standards that we have, or any of the applicable legal or regulatory requirement. Okay, so that's how you are required to look into all of these things. Clear? Now, I think as around these acceptance, engagement, performance, all of these criterias we have talked about. Now, quickly, if you have to just compare these two standards. Now, SQC1, where does it apply? It applies to the entire firm. And it fixes the responsibility of the firm to be assumed by the leadership, right? But when it comes to SA 220, now please understand it's specific to the engagement. And therefore, who will take the responsibility for this? Who will be a sort of in charge for this? Will it be the leadership of the firm? No. See, the engagement is the responsibility of the engagement partner always. Yeah. So who is the in charge engagement partner? So that's why when it comes to the application of SA 220, so it will not fall on the leadership. In fact, anything which is related to the particular or the specific engagement doesn't fall on the leadership. That will always fall on the engagement partner. Excuse me. Now, when it comes to SQC1, it is applicable to audits, reviews. Review means the limited assurance that we provide, okay, or any other assurance or related services engagements. But when it comes to SA 220, this is something you will consider only for the audit engagements, right? So over here, we are not looking at any other assurance engagement. We are only talking about the audit engagements specifically. Now, when it comes to SQC1, it relates to setting up of a quality control system. See, SQC1 is nothing but the SOPs actually. Yeah, and what are SOPs? We talk about the best practices, we talk about the policies, procedures, right? And in this case, the organization happens to be the professional firm. But when it comes to the SA 220, it deals with the responsibilities of the engagement team. Over here, it's the engagement team which is the relevant team for that particular engagement, or you can say the relevant party or the concerned personnel out of this entire setup of the professional firm. So that's why it is something for the engagement team to look into. SQC1 pertains to establishing a system of quality control designed to provide the firm with a reasonable assurance about what? That a firm and its personnel comply with professional standards and regulatory and legal requirements so that reports issued by the firm or the engagement partners are appropriate in the circumstances. Okay. But when it comes to SA 220, it is premised on the basis that firm is subject to SQC1. See, once again, one thing we need to remember is that SQC1 come first. Every time a firm is set up, so what do they need to do? They need to set up their policies and procedures. Okay. So every time the firm would have applied SQC1, that is when they will get on to the engagements. Okay. So that's why you can say that SQC1 is a sort of preset for SA 220. And without SQC1, actually SA 220 may not be achieved. Because if let's suppose something is not there in the policies, so how do you apply that at an engagement level? You need to have the policy, you need to have the system in place, only then you will apply it. Otherwise, its application will not be possible. Or even if you do that, it may not be applied in an appropriate manner or in a complete manner. Okay, so that's why you can say it's the base. SQC1 forms the base on which SA 220 will stand. Without SQC1, SA 220 may not be possible or may not be able to achieve the desired results. Correct? Now, mechanisms for the review of quality control. So now there are again various mechanisms for this quality control. Of course, ICAI has a peer review board. Then we also have this QRB, and very commonly we get to hear about this NAFRA, which is also a sort of regulator in terms of ensuring the quality control parameters by various professional firms. Yeah, so what are their roles and responsibilities when you talk about some of these reviewing bodies? See, their role and responsibility is, we can say, is all about ensuring that the firm has applied the relevant professional requirements. Okay, which is again specific to the engagement at times, or which could be related to the organization as a whole. So that's why they may be looking at the SQC in terms of that particular professional firm, which they pick up for their reviews, or they may be looking at the engagement. And if they pick up the engagement alongside, they can also look at the reviews of the policies and procedures which the firm is subject to. So it's not necessary that they will be looking at only the one aspect. Maybe they are looking at both the aspects. And these reviews are very common. In fact, some of these reviews become sort of mandatory on a time basis. So every firm is required to be subject to peer review depending on the criteria, and QRB, NAFRA again. So these are something which will be picked up on an engagement by engagement basis, or maybe on the basis of certain parameters when it comes to the overall organization. Okay. So now what I'll do is, before we go back to the questions, what we can also do is we can just quickly look at a checklist. Okay. So for example, if there is a professional firm, if let's suppose they were to follow SQC, okay, so what is it that they will practically do? So generally what these firms will do is they will follow a kind of checklist, okay, for this SQC to be implemented. See, SQC actually, you can say, is a kind of project for the firm to implement to begin with. Yeah, because only then they will be able to come up with the policies and procedures. Yeah. So in this checklist, what do? They can just put down all of these requirements related to SQC1. Okay. On the basis of the various elements that we have. And it's all about 6 elements which exist in case of that SQC1. Now, using this checklist, what they can do is they can always have a documentation that as against a particular para of a SQC, what is the document that the firm is having and how the firm is implementing that on a annual basis or on a periodic basis. If let's suppose there are any observations as around its implementation, and of course any corrective action which is required, and what are the timelines, some of these aspects. So this is also how the firms may be required to implement some of these requirements. Okay, for example, if let's suppose we talk about independence. Now we discussed that independence as a policy is required to be put in place. Okay, let's suppose the firm has put in place this policy of independence. Now, further on the independence, what do they need? On the independence, let's suppose firm has a policy that every year they obtain independent confirmations from all of its personnel. Right. Now, what will the document reference here? Independent confirmation document. Okay. You can say it's sort of template which the firm will maintain. Okay. So this can be the document reference. Now, what will be the implementation? Implementation is all about, let's suppose the firm has a dedicated team. So many times they will have a dedicated or a separate team which is working on some of these requirements related to, you can say, risk management system within the organization. So this team, or maybe one of the persons within the firm, may be playing that role. Yeah, so again, it varies. It varies according to the size of the firm which will be there, the number of personnel it will have. So what do they have? So in terms of its implementation, so what do? They will ensure that all of these employees have filled these confirmations on time, and they have also been submitted. Further, one of the persons will be reviewing some of these forms, or maybe all of these forms. Okay. If there are any non-compliances, if there are any areas over which the independence is not maintained, okay, which will become the observations for the firm to work into. Okay, over which the firm will set up a timeline. So let's suppose, say, one of the directors of the firm, let's suppose, happens to be the shareholder of one of the audit client. Yeah. So now, as a firm, what do they need to do? They need to ensure that this conflict of interest is not there. Okay, so in terms of the audit allocation, in terms of acceptance of the engagement, so some of the areas which are required to be looked into. So how will the firm get to know about it? Through the application of some of these requirements. So that's why when it comes to SQC, one should also remember the fact that SQC is not only about putting down the policies and procedures. SQC is also about the implementation of those policies and procedures. Okay, so its implementation again is a very important part. And to ensure that the policies and procedures are there, they are being implemented, who has the responsibility for this? Of course, the professional firm. Okay, they have the responsibility for this. So that's why some of these documentation requirements can also be seen. Again, it varies. Some of the firms may be maintaining this, some of the firms may not be maintaining this. So it's not necessary, and it's not a kind of checklist which is mandatory. But again, this is all about the good practices. Okay, so in this case, you can see that for each and every element, okay, so you have a separate piece which is broken, and that will be working on the basis of the different elements which exist within this SQC1. Clear? Yeah. All right, so now coming back to the questions. Okay, so let's look at this. MB and Associates is a partnership firm which was established 7 years back. Okay. Firm is getting new clients and has also been offered new engagement services with the existing clients. Okay, so there are two different things. One, to get the new client. Let's suppose ABC Limited is one, PQR Limited is one, okay, MNO Limited is one, B Limited is one, D Limited is one. So all of these are different clients. But what may also happen is, let's suppose on the same client, the firm is being offered different engagements. Let's suppose they are doing the audit. They are also offered some certification work. Okay. They are also getting to do some sort of, you can say, advisory work. Okay. Now, again, whether that is something which will be within the permissible criteria, because if, let's suppose, you are auditing a company or you are auditing any entity, then there are some restricted services you can't provide. So I'm just talking about those additional services which can be provided. So the firm is getting both new clients as well as new engagement services on the existing clients. Okay, so this is how actually the firm will grow. Firm is concerned about obtaining such information as it considers necessary in the circumstances before accepting an engagement with a new client and acceptance of a new engagement with an existing client. The firm is looking to work only with select clients. Why? Because they believe that they need to maintain some quality control standards. And for doing this, they don't want to work with every type of client. So they want to be selective in terms of the clients they choose. So that's the objective. You are required to guide MB and Associates about the matters to be considered. Okay, so now what is the question? we need to look at the matters to be considered with regard to integrity of the client as per the requirements of SQC 1. Okay, so now if let's suppose you were to accept a new engagement, or let's suppose accept a new client. So we discussed that every time we accept an engagement, what do? We need to do some sort of assessment in terms of that entity, in terms of its KMP, its promoters. Okay, so that we are able to evaluate the risk which is attached to that particular entity in that particular engagement. Okay, and only when that assessment is completed and when the firm believes that yes, it will be okay to go ahead with that engagement, that's when they will be able to pick up that engagement. Otherwise, no. Otherwise, they can't just pick up any engagement, or they just can't keep picking each and every engagement, irrespective of the risk which is involved on that. Okay. So I think the similar sort of requirement the firm is also looking into in the given situation, and they are looking at the matters as around the integrity of the client to be evaluated. So let's look at this. Now, firm should obtain such information as it considers necessary before accepting a new engagement or a client, or when deciding whether to continue on an existing engagement. Now, this is again important. As we discussed, that it's not that when a new client will come up, that is when you will do the assessment. No. Even if, let's suppose, there's an existing client for which, say, an audit has been completed for a particular financial year. If we want to move to the next financial year, we need to reassess that. Okay, is it a mandatory requirement? Answer is yes. And we may be thinking that, but the auditor is appointed for a block of 5 years. So what will happen if we reassess and the problem is found? So the auditor is required to look into those factors then. Okay, and look into this factor whether he would like to continue or not. So to say there is a block of 5 years doesn't mean that you are bound with that. Okay, so it's an arrangement which you have done, but any of the parties may quit, again depending on the regulatory requirements which will come into play in such a situation. Okay, now where the issues have been identified, any sort of issue that you identify and the firm decides to accept or continue the client relationship or a specific engagement, in that case the firm should document. Okay, see, as around this acceptance or the continuance, you can say it's one of the elements of SQC1. Or let's suppose firm has a policy that this is what they will do. So what will the policy say? Firm should do this in respect of every new client. But what is important is whether the firm is actually doing this or not. Okay. And if let's suppose the firm is doing this, what do they need to do? They need to document it. Because if they don't document it, then how will the firm be able to demonstrate that this is what they have done? So it's like similar to the audit engagement. So when you go to an audit, what do? You document the audit procedures, the audit evidences, everything around the work that you do, so that you are able to demonstrate, yes, this is what we have done. Okay, or this is how we have done. But if let's suppose that documentation is not available, will you be able to prove a point that yes, it's been done? The answer is no, you will not be able to do it. So the same goes with the application of SQC1 as well. Okay, so over here, once again, the documentation is very important, because if the documentation is not there, if the documentation is missing, then the work is considered as if it's not done. Clear? Yeah. Now, with regard to the integrity of the client, what are the matters you'll consider? For example, Identity and business reputation of the client's principal owners, key management, related parties, those charged with its governance. So how do you do that? See, a very simple, and the first step you'll do is Google. Okay, you'll just search for any of the recent news. So it's not about good news or bad news. You'll just want to check. Okay, so if there is anything around the promoters, around the KMPs, around the senior management also at times. Okay, if they are involved in any sort of activities, if they have been in the news, what are the matters? Okay, and does it have any bearing as far as the audit engagement is concerned? Nature of the client's operations, including its business practices. Again, it's driven by the nature of the operations at times. Information concerning attitude of clients, principal owners, KMP, and TCWG towards such matters as aggressive interpretation of accounting. So if you come across any such areas, okay, wherein you believe that the positions which have been taken by the management, maybe as a part of your preliminary discussions with the company, or maybe during the course of audit itself. So that will give you some insights. So that will give you some sense as to what is it that they are trying to achieve, what are the practices which they are generally into. Yes or no? Yeah. Whether the client is aggressively concerned with maintaining the firm's fee as low as possible. Again, this is something we have talked about because this will again have bearing on the quality. Indications of an inappropriate limitation in the scope of work. See, the moment you say that there's a limitation in the scope of work, so what will happen? You will not be able to complete the desired work. Or if that work is completed with the limitation, the work is not completed actually. Yes or no? Yeah. So that again is an important factor to be considered. Okay. Limitation in the scope of work. Indications that the client might be involved in any unlawful activity. Okay. That is again an important parameter for the auditor or for any engagement to be looked into. Reasons for proposed appointment of the firm and the reasons why the previous auditor has quit or maybe has not been extended further, right? So all of these factors become important for the firm to look into. I understand, Saminathan, you have a query. Yes, please pick up. Yes, Saminathan, please speak up. Please explain your query. You've raised hand.
Am I audible, sir?
Yes, you're audible. Please go
Yeah.
ahead.
My query is the indication of an inappropriate limitation of the scope of work. So,
Right.
what is the appropriate limitation can be done by client?
See, to say that limitation in the scope of work is inappropriate, so we are just trying to explain that whenever this limitation of scope of work is there, that is inappropriate. Okay, so there is nothing called as appropriate limitation or inappropriate limitation. So this limitation in itself is inappropriate. Okay, so that's the point here. And every time there is a limitation in scope of work, so what will you think? You'll think, or what's the thought that will come to your mind? So every time when you talk about an audit, so there's a set of standardized procedures, okay, over which who will take the decision? Auditor will take the decision as to what he will do, what he'll not do. So this complete flexibility in terms of those procedures need to be maintained from the management side, from the client side. But if let's suppose client has put some limitation, that this is one area we want you not to focus upon, or maybe this is one area over which we will not have the required information, maybe for any reason. Okay, so that will give you some insights, or that will also be one of the factors basis which you will want to decide whether you want to continue with that engagement or not. Okay, that is what has been called as inappropriate. Clear?
Okay, sir, I got it now.
All right. So let's look at the next one. SPS and Associates. It's a firm of chartered accountants. They are the statutory auditors of GREC Limited for the last 2 years. GREC Limited is engaged in manufacturing and marketing of pharmaceutical goods in India. Okay, so that's the nature of the business of this company. Excuse me. During the financial year 23-24, company has diversified and commenced providing software solutions. So it seems the company wants to expand and they want to diversify. Okay, so the company has started providing software solutions in e-commerce in India as well as in certain African countries. Now, SPS and Associates, while carrying out the audit, notice that the company has expanded its operations into a new segment as well as in a new country. SPS and Associates does not possess the necessary expertise and infrastructure to carry out the audit of these diversified business activities, and accordingly wishes to withdraw from the engagement and the client relationship. Okay, so now it's a situation wherein the auditor believes the auditor doesn't have the required competence and the skill set. Okay, or maybe they do not have the appropriate resources to perform this audit. So that's why, what do they want? They want to withdraw from the engagement. Okay. Now in this case, you are required to comment upon the issues that you will have to address before you decide to withdraw. Okay. So let's look at this. Firm should establish policies and procedures in relation to acceptance, continuance, correct, wherein the thought process has to be around the competence. Okay, any capability which is required, whether the firm or the engagement team, particularly the engagement partner, will he be able to devote the adequate time? Okay, will the firm have resources to perform the work or not? And it's not something which the firm will do for a new client. Generally, this assessment is done more for the new client, not for the existing clients, but at times in respect of the existing clients as well, this assessment may have to be required. See, one is the documentation requirements in terms of its evaluation, that of course the firm will want to do. But if let's suppose the firm doesn't want to continue on some engagements, so this sort of assessment in terms of the availability of the resources, this may also be at times performed by the firm. Okay, because it may be their thought process that do not want to devote their resources maybe on an existing client. Maybe they are getting a better client, okay, with a better fee. So that can also be one of the factors. In the given case, SPS and Associates came to know that the company has expanded operations into a new segment and they do not have the necessary expertise. Okay. Now, What are the policies and procedures on withdrawal from an engagement or both from the engagement and client relationship, which are required to be looked at? Discussing with the appropriate level of the client's management and TCWG regarding the appropriate action that the firm might take based on relevant facts and circumstances. Again, see, I think this is a very basic requirement. So every time, if let's suppose they do not want to continue, so what do? They will have to talk to the management. They will have to talk to the client that this is what they want to do, or this is what they want to not do. Correct. So if they want to withdraw, so they will have to discuss. Yes. So that's the very basic aspect. If the firm determines that it is appropriate to withdraw, discussing with appropriate level of client's management, TCWG, that is something which is required. So first of all, they will try to understand as to what are the challenges. If let's suppose the client is also accepting the fact that okay, it's okay, it's fine if you want to move out, then of course the appropriate level of discussions will take place. So first of all, what do? You go talk to the management, maybe the CFO in most of the cases, and then you move up to the senior management, maybe the CEO or maybe the board of directors. Correct. Next, considering whether there is a professional, regulatory, or any legal requirement for the firm to remain in place or the firm to report the withdrawal from the engagement, together with the reasons for withdrawal to the regulatory authorities. See, to inform the company is important and this is required, but many a times there could be a regulatory requirement, okay, to report upon this. That this is something you are trying to do, or this is something you are following in terms of your withdrawal. So that will also have to be then looked into. Correct. Documenting significant issues, consultations, conclusions, and the basis for conclusions, if there are any, which have led to this assessment on the part of the firm. Okay, basis which they decide to withdraw. Okay. Let's look at the next one. PQR associates are the statutory auditors of an unlisted company. So it's a large unlisted company, and this is engaged in the manufacturing of auto components. Subsequent to reappointment of auditors in the AGM, company shared the appointment letter with the firm PQR, seeking their acknowledgement and the acceptance letter. Okay, so now company has appointed, and now what do they want? Acknowledgement, acceptance letter. CAR is the engagement partner and is planning to issue the acceptance letter. During the current financial year, there was a search by income tax on the company and certain accounting records were seized for verification. So this is what the regulator has done. Okay. Based on the information available on social media, now it's in the news. CAR noted that promoter's brother is contemplating to contest in the ensuing elections under the banner of a political party. Okay. So there are a couple of matters in this case. One, in respect of the company, okay, some sort of regulatory investigation seems to be going on. That's one. Number two, if you look at the promoters or the family members of the promoters, okay, they seem to be having some sort of political connects. Okay, and they have those wish lists in terms of contesting the elections. One of the current senior engagement team manager who has been doing the audit engagement till last year has left the firm and is planning to provide some accounting services to one of the associate companies. PQR associates are yet to recruit another senior manager having adequate experience in the audits of clients engaged in the similar sector. In this case, I think this is the third event which has happened. So the senior audit team member has left the firm. In this case, elaborate the matters to be considered by PQR with respect to acceptance and continuance of client relationship. Okay, so let's look at this. Now, what are the matters they need to consider? Integrity of the client, promoters, and the KMP. So that's one. Competence. Competence on the part of the firm. It's not on the part of the company only. Competence on the part of the firm, whether they will be able to do the audit or not. Third is, of course, compliance with the ethics, okay, which is in terms of independence and various other criteria as per the code of ethics of the ICAI. The firm should also obtain such information as it considers necessary in respect of the client. If, let's suppose, there are some issues, resolution of all of those issues. Okay. Engagement partner needs to form a conclusion on compliance with independence requirements that will apply to the audit engagement. In doing so, engagement partner shall obtain relevant information from the firm. Okay. To identify and evaluate circumstances, relationships that create threat to independence. See, that will become the basis for CR to respond, because he is required to respond that, of course, they have been appointed, but they acknowledge and yes, they are ready to accept and they are eligible. Okay, so how do they get the eligibility? That will be by checking these ethical requirements also. So the firm should follow their firm's policies, procedures. This includes evaluating the integrity of the client, assessing potential risks, and ensuring firm has necessary resources. That's one. Communicate clearly with the client regarding the scope of the engagement. Again, a very important part and a very basic requirement. Okay, what are the management's responsibility? What are the auditor's responsibilities? Independence and objectivity. Now, this is something which will fall through the ethical requirements. So these requirements will also be required to be looked into. Any potential threats to independence, they will have to evaluate. Okay. Now, in this case, since the senior manager who was on this engagement is providing certain accounting services to one of the group companies, engagement partner should assess whether it would have any impact on the audit and examine the relevant ethical or independence requirements. So that's one. Okay. Continually monitor the client relationships for any changes or development. So that is something which will keep happening during the course of the engagement. For example, this regulatory matter which is going on. So engagement partner should evaluate the risk of material misstatement due to this matter. Okay. In fact, this audit planning which they will do, the risk assessment which they will do, will have a impact in respect of this matter as well. Okay. And of course, ensure that the engagement team, because they are still in the process of hiring the person with the requisite skill set and with the experience of this particular sector as to how they will be able to manage that. Yeah, because departure of the senior manager need to recruit a replacement with the specific industry experience will be important. Yeah, without which the resources which they may have may be there, but they may not be the one who are competent to do this job. Okay. All right. All right. I'm just hoping everyone is clear so far. Okay, so let's look at the next one. Right, Saminathan is clear. Good. CA Giri is a senior partner of Messrs. TSV Associates. It's a reputed firm of chartered accountants who has been in practice for 5 decades or more than 5 decades. Firm undertakes statutory audits of large listed companies across various industry sectors and has more than 50 qualified experienced professionals. So it's a good team size that they have. CA Giri has been assigned as EQCR for an audit of a listed company. What are the aspects which will be looked into by CA Giri as an engagement quality control reviewer? Okay, so what is the first requirement? The role of EQCR, actually. That's what you need to comment upon. Next, upon completion of the review, CA Giri has identified certain issues with respect to revenue recognition, number one. So there are some issues on revenue recognition. Adequacy of provisions relating to onerous contracts. Means the provisions are not adequate. Okay. And there's now a conflict between EQCR and the engagement partner. So in this case, what do you do? How do you resolve this? Right? Clear? Okay. So now, as per SA 220, EQCR on performing an engagement quality control review. So what shall we consider? One, evaluation of the independence requirements in relation to that particular engagement. So we are not talking about SQC1. Okay, please remember it's the engagement specific independence requirements. Okay, whether the engagement team members are independent or not. So that's one. Whether appropriate consultations have been taken in respect of any tricky or complex matters, or if let's suppose there's any sort of conflict. Whether audit documentation selected for review reflects the work performed in relation to significant judgments. So it's about focus on significant judgments. See the areas where significant judgments have been taken. So that is where he'll want to focus on. Okay. If let's suppose there is a conflict which seems to be there. So how do you resolve it? You need to look at the mechanism which the firm would have put in place. As we discussed that every time, what do we need? The firm needs to put a mechanism in place. Okay, so that mechanism they need to follow. So if let's suppose there's a conflict, if the mechanism is there, so that is what they will follow. So they will understand that they need to reach out to, say, the managing partner, or maybe their separate dedicated person has been designated whom they need to reach out to, who will be able to help in this situation. Correct? Then I think Saminathan has a query as EQCR is a part. See, it's a part of both. It's a part of both because it's about the quality control that needs to be put in place. Okay. So you need to look into the quality control mechanism, which will have requirements for this EQCR. Okay. And the roles and responsibilities which the EQCR needs to play. So now what I'll do is I'll also pick up one RTP. Just give me a minute. So this RTP, we can pick up some questions. All right, so let's look at this. Okay, so we have this RTP for January 26. So let's look at this. RBC and Company Chartered Accountants is a large audit firm engaged in audit assurance services across various sectors. Firm currently maintains documentation in both electronic and physical form. However, during the audit, it was observed that the physical files are neither scanned and incorporated into the electronic form or nor cross-referenced with them. As a result, documentation remains scattered. Scattered means some part will be in hard copy, some part will be in electronic form, but there's no connect between these two. Okay. Additionally, several audit working papers lack clarity on whether the information was obtained from the client or they were prepared by the engaged. So there's no clarity as to what is prepared by the client, what is done by the engagement team. This ambiguity raises concerns regarding the reliability and origin of audit evidence. How do you view the above situation from the point of view of quality control system in the audit firm? So do you think it is appropriate or do you think something needs to be done by the company in relation to such type of documentation mechanism which they have put in place? So clearly there seems to be a disconnect. Yes or no? Yeah, so a disconnect is clearly there. Now let's look at this. Physical files, as we have discussed, see, they should have some sort of connect. Okay, inability to do so shows that the firm has not established policies and procedures to maintain integrity of engagement documentation, which is important. So that means somewhere in the system, the application of SQC1 is missing, or you can say that is not appropriate. Yeah. Where the engagement documentation is in hard copy. Okay. Now, or if let's suppose that is in electronic form or any other form, and that can be altered, edited or deleted. So that is not something which you call as archived. So there has to be a proper mechanism for archival, after which any sort of documentation cannot be touched upon without the relevant approvals, which will again go by the mechanism or the system which the firm will set up as per the requirements of SQC1. Okay. For the practical reasons, original paper documentation may be electronically scanned for inclusion in engagement files, and which is more appropriate to do that. So what should they do? They should generate scanned copies that reflect the entire content of the original paper documentation. Integrate them and enable the scanned copies to be retrieved and printed as and when it is required. Now, as regards the disconnect, means what is prepared by the client, what is prepared by the engagement team, this is a very bad situation to be in. Okay, so therefore it is very, very important to differentiate between these two as to what is prepared by the client, what is prepared by the auditor, because something which is prepared by the auditor, that is what you call as the working paper, and that is what is supposed to be the documentation of the audit team. Otherwise, it's not the documentation of the audit team. Otherwise, it's largely about the document which you obtain, which is of no use. Okay, yeah. So wherein you may say that if let's suppose that particular information is found and you are not able to differentiate, so maybe that particular area may be considered to be unaudited because that documentation is incomplete or not proper. So what will you say? The work is not done. Yes or no? Clear? Yeah. All right. So this is it that we had on these two standards. Hopefully you would have understood some of these requirements. So thanks everyone for your time again and for this participation. And we also have Karuna ma'am today. All right. Thanks, sir.
Good morning, students. So I hope you are regularly revising the syllabus. Now we are at very important section 1, engagement and quality control standards, right? So we are through with all remaining 4 sections, and at very important section we are today, and we have discussed SQC1 and SA220, right? Chapter 1, quality control. Okay, so what I feel that, as we have discussed previously also, we need to go through the concept, and in this class we'll be practicing with the help of questions, right? So I hope you are studying the concept well before, and after learning the question, after learning the way to write the question, how to interpret, because when we interact with students, we are finding feedback that they are not able to understand the requirement of the question. Like, what is the requirement of the question? They are failed to understand. So that is the reason they are not able to write the required answer. One of the reason may be that we are studying with the help of shortcut, right? We are not studying in depth. We are lacking at conceptual clarity. So with these sessions, we try to make you understand that what are the concepts you need to go through thoroughly, right? So again, we will be having our next session on engagement and quality control standards only, and that is very important section. That is a one section which can alone make you pass in the examination, right? So definitely you must have grip on engagement and quality control standards, and for better understanding, you are advised to read the standards beforehand, so that when we are deliberating, when we are discussing on the questions, you are also able to deliberate the same. And after listening the session, please do write questions and understand, and try to evaluate whether you are able to understand the requirement of the question and you are writing the relevant part. It should not so happen that in the examination we are not able to understand the requirement, or we are misunderstanding the requirement and we are writing some other answer. So again, and of course we also need to analyze that how many marks are allocated to that particular question. Maybe it is for 5 marks or 4 marks, then for which part how many points you need to write. So if you have studied in shortcut, then again you will not be able to write the same. So please try to understand the concepts and have in-depth study, so that in the examination you are not finding this kind of difficulty and you are able to fetch good marks, right? And if you have any feedback on the sessions, on these LVRC classes, please feel free to share. You are also having feedback form. Apart from the same, I hope you all are having BOS mobile app, through which you can share your feedback. Ask your query feature is there. If your any doubt is still remain, you can reach out to us through that. You also have our landline number 0120304595. You can reach out to us through that also. And one more thing to handhold and to support you, dear students, BOS Academics is also coming out with fortnight program, right? So wherein the success tips insights will be shared with you, and we are commencing the same by 11th of the November, and it will be at 3 p.m. So please make it convenient and attend the session so that you can have tips and important questions so that in the examination you can get the very good marks, right? So not taking much of the time. Thank you, Achal sir. Thank you, dear students. Thank you, technical team and BOS team for the support system. And thank you to all of you. Thank you. Yeah, Manish. Okay, good day. Thank you.